everyone, welcome to the Ichimoku charts.com daily analysis for the S&P 500 for Wednesday, July 24th, 2013. Well, a change of trend today and a candle with a lower high and a lower low. Previous day's trading, you recall that I suggested there was a strong possibility for a change of trend with this bearish engulfing pattern that developed in the market. The trend hadn't changed at that stage. And we had a large black body that engulfed the previous white body of the previous candle, following this very strong first time frame uptrend that the market's been in for the last week or so. Today, confirmation of that trend with a lower high and a lower low, which is what's required with the Japanese candlesticks. I also suggested that the market may be finding some support around the 1687 level and then also around the Tenkan-sen. The Tenkan-sen is now trading up around that 1687 level. And today we saw the market testing below the Tenkan-sen and finding support down below there, with the market failing to close down through there. Now, very often when that Tenkan-sen is pointing up sharply, it's reflecting the very strong upside momentum in a market in that first time frame, and it's the first area that the market tends to find support and bounces off there. So even though we have a very bearish candle, there is a good possibility that this market could trade higher for the next period. Now, this is one of the most bearish candles that we've seen for quite some time. The size of the body is much larger, and the size of the black body is much larger than any black body that we've seen for probably about a month or so. So this does suggest that the sellers may have found some new downside momentum in a magnitude that we haven't seen for some period of time, so we could possibly see this market test lower. But I suggest that the area around the top of this highlighted zone of previous support and resistance may act as very strong support for this market moving forward over the next few days if we do trade down through this area. Now, with this large black body, it denotes that the sellers have made a large amount of net bearish progress on the day between the open and the close, and they've extended the amount of net bearish progress that they made on the previous day. And that's what you'd like to see for establishment of a trend, and it tells us that the downtrend now is quite healthy. We have seen the sellers close with control. They've closed down between the midpoint level and the low, but not strong control. If they close down at the low, then that would be mean that they were very strongly committed. But if we see this shadow on the bottom, it represents the sellers losing commitment down below the Tenkan-sen. So crucial to this market is how it reacts to this area where the Tenkan-sen is trading at the moment, and this area around the 1687 level of support. So if we do see early bearish activity down below the low, a good chance of the market testing down to around the 1675 level. In terms of the Fibonacci extension, and we're examining the relationship of this new first time frame downtrend to the previous time the market was trending down, and here today we've seen the market trade below the 100% level and be rejected from there and failing to close below there. So this does suggest that there is a possibility of the trend changing back to the upside. But with this very strong bearishness in the market at the moment, with this large black body, probability of that happening is not great, but it is a possibility, so we do need to be aware of that. If the market does continue trading down, then the target at 161.8% is 1678. Looking to the Fibonacci retracement of the prior uptrend, and here today we've seen the market trade in a fairly bearish manner through the 38.2% level, test down below the 50%, test exactly to the 61.8% and be rejected from there, and fail to close below the 61.8% and also fail to close below the 50%. Now that could be quite significant, so we do need to be aware that there is a possibility of a change of trend, but the short-term dynamics in this market with the sellers in control are not necessarily supporting that, so we're getting some conflicting signals here. But with this rejection below these levels, it does suggest there is a possibility of that change of trend. So that makes the low of the current candle very, very important. I suggest that strongly bearish activity down below that low will probably see the market testing at least down to around the top of that previous area, highlighted yellow area, or to the lows around this the bottom of this previous swing around the 1671 level. Now, in terms of Ichimoku, obviously a bullish market in the long-term time frame, with the market trading above the cloud, and we are trading a long way above the cloud, and I suggested that we are seeing quite a bit of disequilibrium in the market at the moment, and still trading a long way above the cloud, and the cloud represents equilibrium in that long-term time frame. So there is still a possibility that this market may attempt to retrace back towards the cloud. In the medium-term time frame, we are trading above the Kijun-sen, so the market is still bullish in that medium-term time frame, but that Kijun-sen has turned flat, and we are now seeing price action attract back towards there. So there is a possibility of price action continuing to test to lower levels, and that would be in line with the market trying to find equilibrium suggested by that Kijun-sen in that medium-term time frame. So let's look to the low. Once again, it suggests that the low of the current candle is very important. In terms of the fast-term time frame, we are now trading just at the Tenkan-sen, so quite neutral in that fast-term time frame. If we see the market close down below that Tenkan-sen, it may herald a strong change in sentiment, and one that we haven't seen for some time in this market. So let's be aware of that. So that also supports the idea that if we do see bearish activity below the low, we could see the market testing lower. But I suggest that obviously the area around the 1675 area roughly and around these swing lows where the market was rejected from previously should be very strong support for this market. If we do see the trend attempt to change back to the upside, obviously 1700 round number level of resistance is going to be very strong. We have now tested to that level again today and being rejected from there. So the market is bound by very strong resistance overhead, and there is very, very solid support down below. I doubt that we will see this market sell off in any substantial way, and in line with the higher time frame trends, we could see the market retrace, find support, and then attempt to test up to or through the 1700 level once again.